stock of the day today is Telstra. We have obviously last week's Optus outage sort of, casting a pall over that whole telco space. But today the company has held its investor day, reaffirmed its full year guidance, forecasting underlying earnings to be weighted to the second half. CEO Vicky Brady says that the focus will be on improving connectivity as the telco unveils new intercity fibre routes, which include 5 major routes, as well as an expansion of its fibre connections in the Pilbara region in WA. All right, the project is adding thousands of kilometres to ultra high capacity and ultra low latency connections. So our stock of the day is Telstra. Look, very much blue chip, but I thought it was worthwhile doing because, maybe it wasn't this time last week, but last week there was a lot of talk about everybody going over to Telstra, Telstra's networks being overwhelmed by, pay-as-you-go customers coming over from Optus. So is Telstra in a bit of a sweet spot right now?
It could be with those Optus outages, but I think today's update is obviously having to roll out that strategy. It's needed with this expanding population and the growth in sort of those Pilbara regions, but it still is a capital outlay that they're going to have to spend, and I think at the moment it's going to be tough to sort of eke out any sort of earnings growth for the company. Financial guidance reaffirmed, but they did also say that due to the sort of nature of professional services largely at the moment, that they're not expecting too much growth throughout FY24. A little bit sort of back end with the some of their tower co growth coming through, but yeah, I just don't think it's got sort of huge capital uplift from a business point of view. Maybe they pick up some extra retail customers, but the business segment is still going to struggle. We'd actually prefer Aussie broadband around these levels. Higher growth prospects, and recently supported by a capital raise. So I think those prices should largely hang in there. Yeah,
there's a lot of attention put on ABB. You can go there, Mark, or you can start with Telstra. What's the view at Teaminvest?
Telstra's a terminal company. It's actually been in long-term decline. When I say terminal, I don't mean it's going to go broke tomorrow, because it won't. No. But if you look at its history, for the last 6 years, everything's been dropping. So in fact, return on equity has been going down for 10 years, and growth is now average minus 11% EPS over the last 6 years. So basically, what's happening is they're shrinking over time, if you like, and that's understandable because they've had a lot of competition from other players and smaller players and so on. And also, we don't spend money like we used to on phones.
Yeah, well,
I use WhatsApp and all these things, and it doesn't cost anything. So the problem with Telstra is that people still
speaking of phones,
people still say they own it for the dividend. Well, the dividend has been going down as well. So the dividend now is 4.3% yield, I assume, fully franked. They're paying out 95% of their profit every year. So the dividend's sort of held up okay, but as the earnings drop, they will have to come down over time going forward. So the problem is, because the earnings aren't growing, and they've got an 11% average over the last 6 years decline in earnings, I can give you a buy price to get a 10% return on it. To get 10% return on Telstra, you can't pay more than $1.60, which is less than half of what the current share price is, because it's on a 22 PE, which is ridiculous for a company that's earnings are in decline. Now that's because there's a lot of people have had it as as you said, blue chip. So there's a lot of support and it's in a lot of funds, but there's no justification for it. And our models are showing if you bought it today, you're going to lose 8.2% a year average over the next 5 years.
Okay, so that is a avoid for the guys at Teaminvest. I can't help but note that UBS has a buy, Ordminet has upgraded to accumulate, Macquarie outperform, Morgan Stanley overweight. Now I know this doesn't do anything for you, but are they all wrong?
Well, they've got a lot of buy recommendations, I'm sure. How many can you put in your portfolio is I guess, the question.
So would you hold Telstra if you owned it, or would you be selling it to make money in ABB, as you said, as your preferred pick?
That's exactly what we look to do. Obviously something that's growing as opposed to in an earnings decline. The yield is not attractive enough over sort of the cash rate at the minute for us to hold it just purely for that reason. And stability, you can get stability in a lot of other things at the minute. So yeah, unfortunately, if you're going to be in equities, you need to be in the growth end.
Yeah, well, and that is, I think, a theme that has come to the fore lately. What are you paying to take, or getting paid to take on risk, of course, in this high interest rate environment? Okay, so that's Telstra. Not exactly a winner for the stock of the day. All right.